Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for December 6th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES here. What you'll notice is that price dropped right into our zone to buy between 78 and 85. We had 2178s, 2185s. That was our target zone after we mentioned last week that we could see a false breakout on the first move outside of this narrow range. That false breakout was to the upside. That would imply a slingshot move in the opposite end until we reach 78 to 85. Once we reach that zone, we could see some buyers come in, which could then lead to a retest of highs or a push to new highs, perhaps toward 2240, the next upside key target. So right now, prices are holding above the high from Friday's session. That's going to be the key level to watch. So right here, you can look and see what the high is. It's 21.97 That's basically the key pivot for the day right there. That's the over-under. Every time price comes into or toward that zone, bulls want to defend it for a shot at squeeze into new highs. Any push and continuation through there could really reach the next upside level at 2240. Otherwise, if there's any faltering at 2214, 2220, then we could come right back and form an expanding range at these highs. So a couple of things to keep in mind every time you're looking for that first major pullback, but the zone we were looking for to be defended by bulls was indeed defended. Now we got to see if price can hold above the high from 2 sessions ago, which is 21.97. All right, let's take a look at the intraday time frame. On an intraday basis, price currently holding above the previous session's close price. That's this white dotted line right here. Price traded down, pushed up off of 2200 and is now holding above 2205s. So right now there's a little bit of a range that's formed up here, and we're right at the center. After the recent push higher in the previous session, off the 2179s, 2178s, price has traded pretty much in a trading range since then. Very quiet range. We really haven't broken that just yet. So I would say it's still a fade new highs, fade new lows type of atmosphere until that changes. Again, this thing could be squeezing higher, so it's safer to fade a pullback than it is to sell on a high, because at some point this high will likely push through and create a new high given the current overall uptrending nature. So be careful up here. It doesn't look like there's a lot of pace or tempo at the moment, but pullbacks to the edges, new highs, new lows, could be opportunities to fade back toward value. All right, let's take a look here at crude oil. Here's crude oil futures currently sitting at 51s. If we look at the daily time frame with the weekly Pivot Boss pivots, you'll see one thing that we've been talking about again was watching 52. And yesterday in the trading room, I said continue to watch it. We're holding at it. We could be building acceptance. But then all of a sudden 52s went offered, and when price came back to it, it was being defended over and over again. One pop above and then it kept holding again, and that paved the way to weakness, and now we're seeing another rejection. Look at the highs here being rejected. Anytime you see a rejection signature of this sort, we're always looking for a retest back toward the midpoint of that range, and that's what happened here. Very similar to here, you're looking for a midpoint retest, typically speaking, after a rejection day. This barely qualifies as a rejection day. But over here, you do have a rejection off the midpoint. You are seeing price trade new lows below the previous session's lows. So now you have lower lows, lower highs, right? We're rejecting off 52, so it clearly appears that price is not ready to see price discovery into the next distribution above 52 to 62. We're still in this range. And the wider range is still 39 to 52. The current short-term range is 43 to 52. So right now, if we have another rejection here off these highs, we could see more trading up here. I mean, it could be another day or two of testing the previous session's close and the midpoint there, which would, or previous week's close would be 51.65. Basically testing that zone before we see a push back. But if we do, we have value, MC VPOC here, composite VPOC, MC VPOC here. So we have any one of these three to contest on the way down. Additionally, we also have some FOMC targets. down here, those are always great magnets to play back toward. So very important key levels here to watch out for, but a rejection at 52 could mean much more weakness. We have to continue to watch 50 to 52 because that could build a little bit of a range. Let's take a look at the intraday time frame. On an intraday basis right now, what you'll notice is that price just pushed below the previous close and low. Price dropped down. This is the previous week's close right here. Bounced up in overnight trading, made it resistance, and is now pushing through this low. So right now, this appears that we want further expansion. If we're going to see expansion from this range to the downside, then we have extended targets, right? So this is our PivotBoss pivots, the previous session's low. This is our 25% target. That's our 50% target. Here's our 75% of the previous session's range. So right now, pullbacks into 50, 93 or thereabouts, 51s could be a selling opportunity for a continuation downward, perhaps into 50, 19 and 50. So right now, we could be looking at a sell the rips type of situation where this thing continues downward toward these targets. So keep that in mind. All right, let's take a look here at gold futures. Here's gold currently in a very tight trading range, but wrong menu. Let's take a look at the pivots here. What we have in this situation is price trending downward and finally finding a rejection low on the second retest. Not a full rejection, but it's a rejection very similar to what we've seen already before in this market. It's not a true rejection signature, but it's something that could lead to more weakness. But 1180 is still the level to watch, 1180, and we continue to be below that level. But look at this here. We drop downward, then we do an absorption signature, then drop, absorption, drop, absorption, drop, absorption. And this one dropped, but rejected. So you can see we're back above that low. It rejected. So that's interesting. The last time we did that was way back here, you know, where we kind of formed this kind of little weird rejection tail. And then we went on to doing a long form absorption before we rallied. So I'm just watching this very closely. Obviously 1200 is still the level. You've got to get above that level. 1180 would show strength. But right now, these lows are being rejected a little bit here. And that could tell you that we're either trading sideways right now or we're building energy for the next move. So at the moment, I think above 1200 would lead to a push back toward value. We're still in a downtrending market, so you have to be careful. And any failure to get above 1180 right now could be a selling opportunity. So not a great market at the moment. It hasn't been a great swing trading market, and it hasn't been a great intraday market as well either. So I would be very, very careful. As you see right now, we have a very clear trading range. You have to short-term trade the range, trade the auction in front of you. So fade new highs into 77, fade new lows into 70. Right now, that is the auction until proven otherwise. So that's the short-term plan, and that's the best plan right now of any time frame at the moment. All right, let's take a look at the NQ. Here's the NQ. We're taking a look now at the higher time frame. And here we are. We have a basic range here from 4625 up to 4900. We've been expanding that range somewhat, and we're trading in the middle chop. And that's typical of what can happen. You can trade that middle chop. As a matter of fact, the value high is up here, the value low is down here for the composite profile if you bring up a micro composite of this range. So it's just bouncing off of the zone right now. We have value here at 4806, value at 4758. So we could just continue to chop right in this zone because that's where the market wants it right now. It's not until we get outside the edges of this range where we start to see a fade opportunity. Right now we're not at those edges. We're just kind of chopping back and forth. Short term, the 4760 level was the high from Friday's market after the expansion day. So I would say short term, any pullback into 4758, 4760 could offer a buying opportunity for a push into 4840. Now if you do see a continuation this way, I would take profits because price has a tendency to change direction very quickly in this zone and chop it. So be very careful in this area and wait for the edges if you're going to play for longer term moves. Right now, shorter term moves off these key levels are best. Now if we take a look at the intraday time frame, you'll notice right here that price is mostly chopping around the previous session's close price right here, which is about 47.80, 47.81. We're just chopping around it at the moment. We are still inside the larger range that formed yesterday after the push up. We kind of chopped this way. That's 47.66, 47.95. So fading the edges of this range could be a short-term opportunity, but right now price could be on the upswing here for the NQ. So it's safer to buy pullbacks than it is to sell fades up here. That doesn't mean you can't sell up here. It just means you have to be more careful. You have to be more careful about your discipline, about your trade location. Over here, there's a tendency that you may get the opposite edge, but at some point you may also see expansion, which could really lead to a bigger move. So right now, any failure to hold 47.60 could be a significant deal, but on the first test down here, we're looking for bulls to defend for the first real day trade of the day. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.